following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly, that's twice a week for those of you out there keeping score, not every 2 weeks, source for options information. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding Options Insider Radio Network. And a lot of you have written in looking for some good ways to get in touch with us here on the old show. First off, we've updated our Facebook presence since the last time we recorded. I know a lot of you wrote in saying, hey, it's kind of confusing. You got a bazillion presences on Facebook, and you're right, we did. We had Options Insider Radio one, we had Options Insider, we had some other ones. We are consolidating those now over there at facebook.com/theoptionsinsider. So if you're already a friend of ours, move on over to there. If you're not, go on over there, like us. You can post some great questions. They're a great way to get your questions featured on this show or any of our other programs on this fine network. And I know some of you also wrote in saying you're having a hard time streaming the show from our site, and that's true, actually. This network has been growing so fast. Our behind-the-scenes server was having a hard time keeping up with that, our service provider, so we made some tweaks. Our site was actually loading all the shows kind of at once whenever you loaded that page, and that tended to slow things down. So if you're going to our site, you're looking to stream some of the archived episodes of this or any other program, it should be all working copacetic now, so you can go check it out. Click on the Options Insider Radio tab on theoptionsinsider.com. Pick the show you're looking for, click on the archives, click on the player at the top of the page, whichever one you want. Most recent episode, archive episode. It's all there. It's all working fine. And then start on over to Facebook and shoot us a question. It'll be great. All right. And joining me on ye old program today, starting off with the man beaming in all the way from the great state of Lobster, a.k.a. Maine. You know him. You love him. He is the Rock Lobster, a.k.a. Andrew Giovinazzi from OptionPit.com. Mr. Giovinazzi, how are things in the land of the lobster?
The land of the lobster is rolling along. Rolling along. That's all I can say is rolling along. The lobsters are flying out of the water. They're still $3.75 a pound. And I don't know how the poor lobstermen are making it, to be honest.
Do the children in Maine, do they all have pet lobsters? Is that kind of the thing? Instead of pet dogs, they walk down the street with a lobster on a leash?
The problem with lobsters out of the water, they don't move really fast. Like, I used to have lobster races when you bring lobsters home with the kids, and you put them on the floor, and they don't move. They don't really move too well. They're kind of heavy with little tiny legs, They're more fun in water.
So lobster race is not a great spectacle. We shouldn't recommend them to all of our listeners.
I don't think it's going to be on ABC Wild World of Sports anytime soon. I don't think it's going to make it.
Good tip. Pro tip.
Fine eating. Tasty.
Pro tip for all of our listeners. Go to the pig races instead of the lobster races. You get probably a little bit more out of it. And you can eat both afterwards. It'll be delicious. One might be a little bit dirtier than the other, but still lovely. All right, and next up, joining us on Ye Old program today, he is known in certain circles as the Viceroy. We just call him Mr. Alex Jacobson, holding down the hot seat over there at Options Express. Mr. Alex, welcome back to the show, sir.
Hey, Mark, I just want to go on record and just caution people that in my neighborhood there's no pig or lobster races. Just to be clear on that, we separate that stuff out. So that should have got a bigger laugh.
You keep the rabble away, huh?
Yeah. Dow theory buy today. Trannies and the Dow at new highs. So tomorrow's expiration. I mean, we've been talking about this all week, and I think Andrew and I have both been clearly outspokenly bullish. Tomorrow's expiration is going to be real interesting. Everybody's on pins and needles right now for the Google call, which has, I think, started. So tomorrow's going to be it's going to be exciting.
I don't know about you where you live, Alex, but the trannies down here in downtown Chicago are always high. So you can count on that pretty much any day of the week. And before we get hateful letters, we'll just keep on rolling right on into the trading block.
The trading block.
All right, listeners, welcome to the old trading block. This is, of course, the portion of the show where we run down what's trading, what was moving the old markets today. And it was pretty much a relatively normal day we're seeing in these thin summer markets. Most of the major indices drifting up about 0.5% on the day. But, of course, no one was really focused on that. I mean, of course, people paid attention throughout the day, but everyone was really focused on what was happening after the bell. Right now, as we speak, listeners, it is an Earnings-Palooza. Earnings coming out left and right, hither and yon. I shall turn it over to my partners in crime to determine which one they want to start with first. Which way are you guys leaning tonight? Where do you want to start the discussion for earnings?
Google, Microsoft.
Which one? You got to pick. Someone pick.
Google.
Google. All right, Google. Alex giving me, throwing the choice back to me. But all right, here we go. Google today, and there we go. My screens are slow. I guess all the earnings juice is just sucking the life out of my screens here. Google closing today $910.68, dropped in the before earnings about $8 almost on the day, or nearly 1%. And looking here at the 910 straddle here in Google, it went out at about $36, $37. So they were expecting a pretty sizable move here, and right now in the after hours, looks like these numbers just came out. Like I said, Google closing at 910, trading 863. So down a sizable percentage, nearly 50 handles here in the after hours. So far in the initial movement, if you're a premium buyer here in Goog, looks like it worked out. This kind of plays back to the earlier analysis we were talking about, where some of these straddles in these super premium names, the well north of 100 names, tend to be underpriced on an almost regular basis. And granted, this is just the first move. Everyone who's watched earnings knows this means nothing. But so far, at least, that appears to be the case. Andrew, what was your take going into earnings and Google here? Were you recommending some long primo? Did you have anything on? What were you keeping an eye on here with the big Google announcement?
You know what? We looked at it in our pit report. It actually looked a little cheap. I thought it was like about $40 for the at the money straddle. So they weren't pricing much of a move, and they're doing the same thing with Apple. I mean, we don't know really what's going to happen, but they're not pricing, huge moves in these, and yet somehow they still are moving. So I think the market overall with kind of the rally we've had, a lot of the volatility going into earnings has been a little complacent. So I've been seeing I think it's been sort of everywhere. So it doesn't surprise me. So maybe you'll see maybe a pop tomorrow, the earnings for a couple of other names. But Google now down, that's a solid $47. That's not nothing. What did I have at the money? I know it was it did not look very expensive to me.
Yeah, it went out at about $37. Yeah.
Yeah, so, I mean, it's almost a double. You pay $37 for a straddle, and you make 100% on your money, or 70% on your money. That's pretty big.
Isn't that how it always works?
Yeah, exactly. It's like the Wheel of Fortune. So I mean, they've been crushing the at the money straddle down to about $21, $22, or $21, I think, in Apple. I think it's almost less than 5% of the value of the stock. So, the market the ball's been being drawn down across the board. So we looked at it. We thought it looked too cheap, but we didn't buy it. Mostly because we didn't want that. For this earnings, we just didn't want that risk. And of course, off it went. So what are you going to do?
And of
Andrew,
course, go ahead, Alex.
As a former market maker, would you want after hours trading in the options on a day like today?
As a market maker, I didn't really care because I just trade the stock after hours, which is what we try to, tell clients. I was always able to execute via instant. I don't know what the deal is with, is that something that OX offers or something like that?
No. It's something the industry has kicked around for years. And
I think you should be able to trade. The problem is I absolutely think somebody should be able to trade stock against their options at least after the close. Because most times if you're interested in it, it's you're long a put and it explodes and you want to buy stock before you wake up the next day and it's back to unchanged. So I think from that, that would take a lot of education in general for that type of trade. But I think being able to trade a stock is enough, but that's a more sophisticated customer. But as a market maker, I never cared because I just traded the stock when I wanted to, and just threw bids and offers on Instinet and see what happens. So, or at the time, it was Arca X.
You're dating yourself now, sir.
Yeah, I know I'm dating myself. But Archipelago toward the end, or on Ready, anything where you could put in, they're still there, but it's just a lot of customers don't have that access, and of course they don't have the margin.
Exactly. That's where it comes in.
It's ridiculous that you can't buy stock against a put when the put's already $14 in the money, and I understand how why they margin stuff the way they do, but that really sort of hurts things that people can't make that trade. And the firms could actually give themselves an extra way to raise some money because you could, loan them money short term for one day so they can close the position. I would think it would be a money winner. That would be the way I would think about it, or a money spinner, I should say, for the retail brokers. But you should being able to trade after hours somewhat is a nice thing, no question about it.
Well, what you could do also is maybe temporarily allow portfolio margin for people with less than $100,000, and then you would be able to do that.
Yeah, that would be a mess, though.
It would be a mess.
Temporarily allow it.
Earnings qualifications for portfolio margin. I like it. Earnings waivers.
I think I just heard Alex's head spin. Oh my God! Calls that my desk would be getting on this. Why can't I do this? Why am I? It would just be a mess.
Of course, listeners, you may recognize there the voice of good old Uncle Mike Tosaw joining us late but better than never. Uncle Mike, welcome back to the show, sir. It has been too long.
Always happy to be here. And been having a lot of dental problems lately.
I was going to say, you sound pretty good for someone who's had a life worth of dental work done in the past couple of weeks.
All his teeth are fake, though. All his teeth are fake. That's why he sounds so good. They took out the old ones, put in new ones.
There's bone grafts. There's all sorts of stuff going on that we don't need to get into. But nonetheless, I am here and I am happy.
Got to stop sucking on those pixie sticks during the day, sir.
Well, you got to do what you got to do.
If the BBI is low, you got to do something else to relieve the stress, right? So the pixie
pretty
sticks.
Pretty much.
There we go.
So,
but yeah, I've said many times on the show what I think about after-hours liquidity. I won't beat that drum again. I'm sure I'll drive the folks at OX crazy with my endless campaigning for that. But you're right, Andrew. There's got to be something. There's got to be some safety valve for these people because all too often, if they are going to spend this money on this kind of premium here, which is a substantial outlay, a $37 straddle, even if for a typical retail guy, even if they're doing a condor and spreading some of that off, it's still an expensive outlay for them. They would like to have some opportunities to get rid of that maybe when the thing is still moving, Otherwise, if you just got to wait till the close, good portion of the time that move has already happened and you lost a fair amount of the value of that straddle in the overnight. So giving them that extra outlet, I think, would encourage them to do more trading, which I think in the end would benefit everybody because they would be less afraid to come in and buy this $37 straddle because they wouldn't be at the whims of the market on the open.
Well, yeah, and you could hedge. I mean, there's no risk to the firm. You can charge them overnight interest on buying, let's say, 100 shares of stock or whatever, or on either way to cover the side of the contract that's making money. And I just see it's a money spinner. I don't, as long as you're buying stock against an in-the-money option, I know that clearly the platforms are more sophisticated enough for that. So that's not a problem.
So you could do the stock. That's not the issue. You could do after-hour stock. The desks are open, and we can talk about market quality, but it's not the firms that are alone in the after-hours issue. It's the exchanges, and I don't know why, if so much of it is upstairs on machines now, you just couldn't, leave them open on an ongoing basis. SIBO is going to extend hours for VIX. Why doesn't the industry extend hours on,
money.
50? But it doesn't. It doesn't. Most of the costs are fixed. The variable costs are very little today. I'm not saying they're zero. Let me rephrase that. But the costs are fixed. If you're Citadel or Goldman or IB, Timber Hill, it's fixed costs. The variable costs of incremental trades for the firms, again, they're not zero. Right. And the issue
there is somebody watching the whole thing, though, at some point.
Yeah, but there's no reason you couldn't halt options at 3:15 the way they do now and reopen them at 3:30 and run them into a night session. I mean, Globex does it. The CME does it with futures. It's just at some point the options industry's got to move forward.
It probably will. It's just it's always, the options are always a little more complex, and obviously this would be an extremely illiquid. I mean, but part of being a market maker is understanding where the underlying's trading, and you're throwing electronic markets out there when the underlying is just in no man's land. So from the liquidity provider point of view, they're like, why the heck should I do this? It's not near as a slam dunk from their point of view when the underlying is moving in like $2 ticks.
Yeah, but to your point, Andrew, you got somebody who bought this straddle, who sees it down $50 and says, I know when I come in tomorrow, it's going to be, pick a number, up 6. And I would have liked to have gotten out, and I, in fact, would have traded more if I'd had that opportunity.
Yeah, you have a simple, I know the market maker argument is one that gets thrown back all the time. There wouldn't be market makers, there'd be illiquid markets, blah, blah, blah. But you have a simple limit order book. People work their limits. This guy who bought it at $37, he's happy getting out at 50 or 60. He works that order in the afternight, gets filled. Hey, he's happy. Comes back and, the stock's unched. And guess what? He had a chance to get out. Stock keeps running. Who knows? Maybe he would be upset if he didn't get out at 100 instead of 60. But,
Here, look at the success of the E-mini, right? All it really is a limit order book, right? Market makers can be there if they want. They don't have to be there. And it trades, like water.
I get that part, but it's a lot less sophisticated of a product.
Yeah.
But
it's difficult for the customer who bought that thing, who looks at it now and says, okay, so the market in the straddle right now would be, 45.51, an incredibly wide market, but I could get out.
Right. I understand that. I understand that completely. But if there's no real, if you can kind of throw whatever market you want up there, so customers can leave a limit order in and decide what trades, that probably could fly to some degree. You're just not going to get the normal liquidity.
Yeah. Well,
at any time.
See, here's the thing: if the Citadels, the Spears, the Timbers, the Susquehannas didn't intentionally cut the machines off, they'd be quoting it now.
Right.
And there'd be a market, and you could have a night crew. Every every brokerage house now runs a night crew, but it's predominantly for futures.
Right.
There's no reason you couldn't give liquidity to that, except all the asterisks. Yes, it would cost a little more money. Not that expensive to the brokerage houses because we're very electronic. Now, maybe that's a different issue at a national wirehouse where you got to get a broker, but even most of them now have some form of electronic access. I mean, I hate to be on the soapbox, but the options industry needs to move forward. I mean, if you look at the big players, the CBOE, the ISC, the consortium that's OM, Philex, and New York, ARCA, those businesses are there 24 hours a day anyway. They're there 24 hours a day anyway. You got so much remote market making. There's no reason you couldn't provide a market. Here, right now, the SEC requires you in after-hours equities to warn the customer that they're illiquid markets. So you actually have to turn around and warn the customer and say, hey, look, you're in after-hours trading. Be aware of the fact that these aren't the most liquid markets. But liquidity begets liquidity. If we left options open, the big books, the big books that provide some of the liquidity in stock would have an offset in options. I mean, everybody today is pretty much a pairs trader. I just think it's a disservice that a customer can't reach out and touch a Google option, in this day and age with this technology after, a couple of minutes after 3 Chicago time.
Exactly. Alex, I'm glad you brought it up, if not me, because I've beaten that drum many times. And for all of you out there, industry folks who give me a hard time because I beat that drum, let me know. It was Alex who brought it up today, not me. So direct your hate mail to him and not to me.
Here, I worked on a team that started an all-electronic exchange.
Yeah.
And I can tell you that much of the cost structure was fixed. That the variable costs of staying open additional amounts of time was, I'm not saying it was zero, but it wasn't that high. But as soon as you get a proprietary product, FX options on the ISE, VIX on the CBOE, as soon as you get a proprietary product that has traction, you're going to extend it to longer hours. And somehow that concern about it's going to be so vastly expensive is going to go away when the revenue's there.
Yeah, I agree. And I think, like I said, I'm firmly in your camp, Alex. I've been there for quite a while, and I'm waiting for the rest of the industry to kind of catch up, or maybe someone to go out on a limb a little bit and kick that tire. I know Box was thinking about it, maybe being the first. They have less to lose in some of these bigger exchanges. Maybe trying out that limit order book around earnings idea. Hell, they just launched the jumbo, spies. They'll try anything. And so it'll be interesting to see if that happens.
Yeah, but I'm going to stop beating this dead horse. The issue is Miami or Box would be clever to do it. The challenge would be the OCC board. You'll never get it past the OCC board. And that's like the UN General Assembly, where any of a handful of members can veto anything.
Yeah, for those not familiar, that is the Options Clearing Corp. It is the big industry bureaucracy that runs a lot of the clearing operations and minutia behind the scenes of your options trades. Unless we lose a lot of you by going down the weeds of the OCC, we'll keep on rolling right on into the next big earnings coming out tonight. That is, of course, Microsoft. They closed at roughly 35.5 today, down about 30 cents, trading down about 33.80 in the after hours. So they were off nearly $2 at one point. Have bounced back a little bit since then. Microsoft, we've been talking about them a lot lately on this show, which is unusual. Like I've joked about this name, for how long on this show, and for ages, that this has always been the resounding meh going into earnings. If you've owned the stock for the better part of the last decade, it's been a disaster. Pretty much the only reliable return you got on Microsoft over the past decade was writing options around earnings. That was the only income, the only trade you got.
And the dividend.
Exactly, and the dividend, because Microsoft didn't go anywhere else for a decade, pretty much. So if you weren't writing options, you were pretty much out of luck. Now that narrative has shifted a little bit. We have someone who wrote in a listener question a little later. It looks like that trade worked out pretty good if we get to it. But Microsoft trading off nearly 2 handles here in the after hours. I know you were working some iron condors out there prior to the earnings. You take all that off, Andrew, or are you still looking some long premium out here in Microsoft?
No, we had some. We made money on it and we took it off. I took it off right before earnings actually. We had made enough money to close it, so that's what we did.
I think a lot of people were leaning to the downside here, directionally going into Microsoft.
Yeah, and we had a lot of finance.
Yeah.
We had a lot of puts that were financed. Let's put it that way.
There you go.
So, well, we closed it. So.
I've been doing some covered calls on Microsoft. I got called away at the 33 level a while back, so I think I might be looking to get back into this.
You're back in the mix.
Exciting news.
You're back in the mix, sir. They brought you back to life. But yeah, you kind of had to. If you own underlying in Microsoft, you had to write something. And this past couple of months is pretty much the only budge this stock has seen in quite a while, and it's been a pretty aggressive run ever since back in May when they announced what was it, the new Xbox One, whatever they're calling it. That kind of really seemed to kick off. Well, actually, it was earnings in April that really kind of kicked it off, trading high 20s, and they gapped all the way up to about 36.5 at one point in this post Xbox news. Xbox being one of the only profitable divisions at the company outside of Office and a few other things, so people are putting a lot of eggs in that basket to keep a lot of the hopes of entertainment division alive. Of course, they had all that news with the CEO leaving and boosting up Andrew's favorite over there, Zynga. So there's been a lot of drama over at Microsoft, which translates usually into a lot of good options trading for us options traders. Microsoft coming off $2. The at-the-money straddle here going into tonight looked like it's about 95 cents or so. So cheap. Another one, yeah. I know you've been preaching the cheap vol in Microsoft for a while here, Andrew. Seems like this is cheap gamma in this case, but
yeah, we needed to close our Microsoft trade to pay for some other losers. So we had a couple. I wanted to keep kind of on the positive side for the day, so I wanted to make sure I booked the stuff that was winning.
Isn't that always just the worst when you take off something that you have to take off something that is going to work out to pay off for some garbage that went against you? It's like a double slap in the face. That's
actually, one of the students were like, "Why don't we just take off half?" And that's what I said. Taking off half is fine, but for where I was, I just had to book what we had and move on. So I mean, it was still a winner, and it was a well constructed trade, but. It could have been a moderate home run.
It's not bad enough you're losing. Now you have to twist the knife just a little bit more and take the rest of that off.
Still win it.
Uncle Mike, aside from Goog and Microsoft, anything else catching your eye here in these earnings frenzy markets?
No, not at this point. Just curious to see how things are looking going into the index settlement day tomorrow.
Yes, it is, of course, settlement time, so that's always a fun time for industry prognosticators and people like us to kind of pound the desk and say, what the heck is going on? Because that usually is the result of those industry settlement processes for our fancier listeners. All right, and that's going to do it here for the trading block. We'll get back and check in on the earnings again before the end of the show. And now we're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the old Odd Block. This is, of course, the portion of the show where we don our fedoras and peer into the seamier and shadier side of the options business. Kicking things off today is Rite Aid, ticker symbol RAD. A great ticker. I know this used to be out in my pit back when I was trading Intel. I never traded it, but I still love watching some of the paper flow go in and out there and talk about just absurdly one-sided. I saw some horror stories of Rite Aid cutting earnings early and just watching that stock drop and watching the poor guys out there having to do naught but sell puts. So keep that in mind, listeners, whenever you think market makers is ripping you off all day. They're the guys also who have to stand in there and keep selling puts when there's no underlying in sight. And that was fun to watch, or should I say painful, to watch that one kind of rip a few people apart. But we've moved forward a few years now, and the pain is not as fresh for those people, I would assume. Rite Aid now trading a whopping $3, so it's an odd block special. And this one gets the mark just for ridiculous size of the day. This is a ridiculous trade, no matter how you describe it. A $3 stock, someone comes in, trades the OC3 combo. Remember, combos buy put sell call or sell put buy call on the same strike. Synthetically, you're trading stock. Someone comes in, trades the OC3 combo 75,000 times for a 2-cent credit. If you slow on the math there, listeners, that's 7.5 million shares effectively that he just changed hands with that trade. Just a ridiculous size trade here in this $3 stock. Of course,
for a penny.
Yeah, for a couple cents.
I don't get it.
I mean, he paid his broker a lot more than that to do that trade for him. That broker's like, sure, I'll do this for you all day. Yeah, just nuts. Just Alex, your head must be exploding right now. Don't even listen to this. You'll probably weep. But yeah, 75,000 combos, 7.5 million shares in this garbage $3 name. Of course, 55,000 open on this strike, so I'm guessing a lot of this was probably closed unless this guy's really just doubling down and swinging for the fences at this point. But Andrew, I'm imagining this one really caught your eye just for pure size alone.
Pure size alone, no dividend, can't quite figure out the combo. The only thing possible, it seemed like a flurry of activity. There's a lot of open interest. There's like 55,000 open interest. So maybe somebody had bought the combo at some point and is now unwinding it, but now there's an extra, it feels like there's like 20,000 extra contracts that went up. Possibly somebody accommodating and flipping it. Who knows? But whatever. I mean, just it's a lot. It was a lot of trade for no edge.
Yeah, no, this was I love my broker trade.
I don't get it, and this is one, again, was totally confusing to me. I mean, maybe the only way I can see is they're trying to they must have to be closing. I wouldn't be surprised if the open interest goes to, will end up being 20,000 contracts tomorrow because somebody's stuck with the other side of this trade.
It's just crazy on every level. Maybe the risk manager came in and said, just get the hell out of this Rite Aid. What are you doing? And this guy had to just dump it. Take it all off for, just love your broker. That's what that trade is called, because he loves you right now. All right, next up, we've got a lot of activity here in Covanta Holding Corp, ticker symbol CVA. This is the newcomer to the old odd block. This one it closed today, $20.87, up about 3% or 50 cents on the day. It's the name that does about 600 contracts a day, so not the lowest volume we've seen on the old odd block by a long shot. Doing nearly 4,000 contracts today. A lot of paper printing out here in this name, and the bulk of it coming in some upside calls here in Dees, particularly the Dees 22 halves. Paper lighting up 1,700 of them in one block and 2,200 total on the day for prices around 55 cents or so. Looks like just your standard straight upside buy here, huh, Andrew?
Yeah, I just think this isn't kind of, what I guess is a business that the government likes right now. So it's like they do waste to energy business, which probably has a good long-term, at least for the next 3 years, probably good potential business for this company. So I think somebody's just making a long-range bet that Covanta catches a little bid here down the road. So not a cheap company either. Trades at a decent PE multiple, but I'd say there could be worse ways to get long this company.
Looks like Tosaw might have been active here. Looks like someone might have legged into a stupid. The Dees 20s went up 800 times too, for a variety of prices. Looks like most of them buys, nearly 800. Yeah, only on 200 open interest.
Mostly I'm just buying calls. I don't know. I couldn't really find any news, so we'll see what happens. But might be one to keep your eye on.
Tosaw style stupid, lighten up the old tape.
I almost did a stupid today.
Did
I wanted
you really?
to,
Did you
just
really?
For the purpose of the show.
Was it a one and done stupid or kind of like a rolling stupid?
It was a rolling stupid.
So that's the only way I could see to really do one. Is it rolls with you and you kind of like, let's put some more, skin on the table, but maybe not at that same strike, a little less meaty strike. That's the only way that it makes sense in my head. Maybe I'm missing something. But someone comes out and just puts on a stupid, there's a reason why it's called a stupid. That's my soapbox on stupids for the day.
I'm going to make you a believer of the Tosaw stupid at some point,
really?
But it would take too long to.
Okay.
He would have to beat you on the head with a stick until you were stupid.
There you go.
All right, and speaking of stupid, we'll wrap up the old odd block here today with a good old odd block special.
Wrap it up with YY.
Yeah, we're diving right into YY. Everyone's favorite, YY Inc., ticker symbol ZQ. No, I'm kidding. Ticker symbol YY. And I love throwing that out there. People always write into me, why do you do that? Because I think it's funny and I have a twisted sense of humor. But yes, closing today, $35.10, up about $1 or 3% on the day. And what we saw today was pretty much some put selling out here in good old YY. particular some pretty near-term put selling. The July 35 puts they got a couple days ago, blasted them out for about 60 to 70 cents, around 1,000 times on the day, with about 1,000 open interest. Looks like this is probably some closing, unless you dug up something else here, Andrew, that I am missing.
I thought it was closing paper as well, because the vol came in really hard, and earnings are supposed to be. I mean, this is a Chinese internet company similar to Zynga. It's a communication social platform which engages users online in group activities and games, and blah 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 blah. So
now I see why you love them so much. I see.
Exactly. Well, that's why when I saw this, I'm like, it has to go on the odd
synthetic block. Zynga.
It is a synthetic Zynga.
Why trade a $3.50 stock when you can trade a $35?
Well, see, this is the funny thing about it, because Alibaba, I think is slated for an IPO, which is could capture like a $50 to $75 billion market cap. I think their earnings are more than Yahoo or than Facebook's revenue. So there's a lot of hype now back in the kind of social media for China. So it's almost like we've got the same, as I wanted the listeners, it's like the exact same thing that happened last year, where they bid up all these social media names. Now it'll be in China instead of the U.S. On the heels of the big Alibaba IPO. And you know what happened last year, of course, the Facebook IPO tanked and blah, blah, blah. So, but this stock is trading at all-time high, and it looked like, again, somebody sold some puts and closed them out, or they were long. Actually, they were long puts and closed them out. That's what it looks like, because the vol got crushed. I don't see how they did. I don't see how they made any money on these, and while the vol was still 100%, they took their money and sort of said, "I'm getting out of Dodge."
Yeah, they probably were waiting for this turnaround to come, never really materialized, and they finally just took it off the books. Maybe they had to close this to pay for another loser somewhere.
I have a feeling that the earnings date must have been announced, and it's not going to be in the July cycle. That kind of is what it feels like.
It's looking here at AUG1 is what they're printing here, so that's unknown. They don't know for sure. But
it's not confirmed, so it feels like somehow along the line somebody figured out it's not going to be between today and tomorrow. So, but again, interesting, just because Zynga lives everywhere, even in China.
Zynga, you can't get away from Zynga. Every show we do, it's like the old Cisco. You couldn't get away from Cisco for a long time with Uncle Mike. Now Zynga will haunt you, or perhaps be your favorite forever. You turn things around on Zynga quite nicely towards the end there. We have a question from Zynga. Maybe we'll get to it later. But first off, we have to keep on rolling right on into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, listeners, you know the drill by now. This is, of course, the portion of the show where I hand the reins over to the Viceroy, and he takes us in some crazy direction of hither and yon. Mr. Viceroy, which way are we headed today, sir?
We started the show, and I think Andrew and I were both bullish and enthusiastic and excited about expiration tomorrow. And while we've been on the show, Google has missed, Microsoft has missed, Detroit has filed bankruptcy. This is like the old Car 54 show. There's just a litany of things that have gone wrong during the show. Expiration tomorrow, and a lot of stuff has moved through strikes. So I think it's going to be a very interesting expiration, especially with the Google and Microsoft news. When I surveyed the desk today and asked if anything was lighting up the phones, the answer was pretty much it's just a little of everything. So there weren't any strong names dominating what the desk was doing today. For Grigas fans, we were sitting in a meeting yesterday morning. We were actually sitting in an offsite, and Grigas is on his smartphone trading with our smartphone app, and it was early in the day, and I said, "What are you doing?" He goes, "I'm short the 10-year." So I just want to showcase that Grigas is short the 10-year, which has not worked for the last couple of days. Little bit today, but 10-year rates back up over 250. And for those macro option traders out there, we've talked about this. Dow theory buy the 10-year. I think it stays under 270. That was our high. We continue to have a good market, but I've lost my sense of what tomorrow's expiration is going to look like, given what happened here in Google and Microsoft. If the tables had been turned and we'd had good numbers in Google and Microsoft, I would still be keeping my 16,000 this week view. But now I'm confused, forlorn, and distraught.
Alex, always the ray of sunshine here on our program. Thank you for that, sir. And, of course, Mr. Grigas, the man never met a contract, futures or otherwise, that he did not want to short. So
it was funny. We're in this meeting, and he's on his smartphone. And what are you doing? He goes, short the 10-year. So, okay, good luck.
I bet you OX is one of the few companies where you could get away with that because you're using their own app to do what you guys are around about. So I think I'd imagine the management would probably take a less dim view than they would in some other companies where if you were trading in the middle of your meeting.
Well, this is a long rant one day about what you could trade at exchanges and firms. We'll do that another time.
All right. Thank you for that, Mr. Viceroy. And now it's time to keep the truck rolling right on into the strategy block.
The strategy block.
All right, listeners, this is the strategy block. This is, of course, the portion of the show where Mr. T comes on down from on high and he proceeds to dispense some options, wit, and wisdom. Mr. T, we've been strategy blockless for quite a while, so my birdies have no idea what to make of your upcoming venture, sir. So go forth and shock and awe us with some strategy blocking, please.
Well, the birdies have been working for me lately, so I think that's maybe, I don't know. Maybe we got to work out some type of dual agreement.
Traitorous birdies.
Yeah, we got to figure something out so that way they can kind of work for both. But how would you like to make money if the market goes up or if the market goes down? It doesn't matter. You can just do this easy trade called a straddle, and it's that easy. Years ago with infomercials, a lot of times you would hear that, and people would be lured to the world of options because of the fact that you can bet both sides of it. And that way you actually have the ability to make money if the market goes up or down. And that attracted a lot of people to the to the retail option world. Now, unfortunately, as most of our listeners know, that it's not that easy. And what I want to go over today is a straddle. By definition, a straddle is when you buy an at-the-money call and buy an at-the-money put simultaneously, and you need the market to move X amount of dollars, whatever the cost of both the call and the put combined is, for you to break even. That's your break-even point on your expiration day break-even point on it. Now, with that, a lot of people, it's hard. I just want to tell you from experience, it's hard to make money on a straddle because of the fact that you pay a lot of money to get that privilege of making money if the market either goes higher or lower. So what I want to go over today is just the way with which I've kind of modified some straddles. And I think with weeklies trading the way with which they are right now, I think there's reason to believe that I think there is a way with which you can explore doing straddles. Now, the first thing, I have to give credit where credit's due. You have to do stuff with this strategy, and that goes to Andrew Giovinazzi. Doing stuff is of utmost importance to make this work. Now, with a straddle, one thing that you can, the main enemy of a straddle is time decay or implied volatility going down while you're long the straddle. So how can you combat those two things? Well, you can do stuff. Now, with that, for the people who have been listening to the show a while, when Apple would go into earnings a little over a year ago, I had a whole variety of various straddle-esque plays with which I would do. And one of the things that I think can make sense to you is with the straddle, you can sell some premium around it and use the weeklies as kind of your aid. So for example, the way with which I would play Apple going into earnings, this is back when Apple volatility was at a lesser level. What I would do is I would buy a back spread, which is the same thing as a straddle, but you just sell an out-of-the-money call or an out-of-the-money put on one side of it. In my case, I would do the equivalent of buying a straddle and then selling an out-of-the-money put, and then I would also sell a weekly covered call on the underlying because I also owned the underlying. So what you can do with this is that you have the ability to set up all sorts of different combinations in terms of using weeklies to help aid in the time decay of your straddle. One thing that I would encourage you to do is not just look at the expiration day risk graph. Also in the Options Express, I believe it's in the trade calculator, you have the ability to look at your position delta, position gamma, position theta, position vega, and I think even your position rho. What I would look at as you're constructing a straddle, even before you get into it, let's say step one, you buy the at-the-money call, you buy the at-the-money put. At what stage do you get it to where your theta is actually paying you? And when you get to it, that's when you know that you're at least on the right track, so to speak, in my opinion for this, because theta is something with which it's going to hurt you in the greatest way. Now, if you're trying to do a straddle going into earnings, whole different ballgame because you have various volatility things with which you need to worry about. But if you're just trying to be a general straddle trader and you think you're going to have a long, more methodical move up or down, you don't know which way it's going to be, what I would encourage you to do is use some shorter term options as a way of mitigating your theta risk. And that is one to grow on.
All right. Thank you for Uncle Mike. You know, we missed the strategy block. It's good to have it back again. I know we're going to be mixing up the host rotation a little bit going forward, so hopefully we'll get some more strategy blocks coming down the road when we get you back on post all of your fun dental work. But
that was well said. Well said.
Yes.
Of course, you gave me credit, so how could I say it was poorly said? Of course, it was well said.
All right. Thank you for that, Uncle Mike. And now we're going to close out the old strategy block and move right on into our final segment, Around the Block.
Around the Block.
All right, listeners, welcome to the Around the Block segment. This is, of course, the portion of the show where we tell you what we're watching for the rest of this week, what we're keeping an eye on. But first, we'll check in one last time with our two big earnings candidates for today. Starting off with Microsoft, it seems to have settled in around that 33.60, 33.70 level. So it's bounced up off the lows of the after hours, but still down, $1.70, $1.80. So if you bought that straddle, it looks like you're still working out all right, and Alex and I will go down that realm again of after-hours liquidity on another show. But still, right now, at least if everything holds the course and opens this way, that straddle buyers in Microsoft looks like you did all right. And that's really one of the first times I've said that in quite a long time. So take heed of that, all you Microsoft degenerate premium sellers out there over the past decade. And, of course, Goog. Good old Goog right now seems to have found a level as well, trading around 867 right now in the after hours, so down, about 43 handles or so from where it closed. Still outside that straddle, not as aggressively as it was, about, 6 or so handles outside where that straddle closed. So we'll keep an eye on that one as well. Of course, as we've said many times on this show, where the things are trading right now in the after hours, where they end up in the after hours, of course, where they open, two very different things. So we'll keep an eye on that. By the time you hear this tomorrow, of course, you will know the answer, and you'll look back at this and say, oh, perhaps very interesting, or those people were fools, whichever way it goes. Speaking of fools, no, I'm just kidding. But of course, Mr. Rock Lobster, what are you watching for the rest of this week, sir? What is catching your eye?
I just got thrown under the bus.
Well, you got credit from me, and then Longo goes and throws you under the bus.
I know, that's called a spread.
Sebastian hasn't been on it.
Two sides of every market. I'm used to it.
I like that, sir. All right, go crazy.
It's the Longo Tosaw spread. I caught in it. It's not even a strangle. That's what I was just strangled, sort of. I don't know. All right. What are we looking at? Google, like I said, I wound some Microsoft. We've got a little play on an Apple. wondering how the volatility, if we maybe might see a little bit in vol after today. Like these earnings, they're probably like the earnings weren't even that bad. It's just that, I think similar to Goldman Sachs, there was such a run up in the name prior. I mean, Google, I think from the last cycle is from 800 to 900 or something. So it's an awful lot of, you're going to need an awful lot of greatness to bid these things up. And then I guess we're looking at Apple coming in next week. So we'll probably have one more show before that. But looking at all those things, also maybe if the metals can bounce a little bit, they're looking a little listless, kind of like a fighter that's been punched out. He's still on the canvas and he's trying to get his head off the canvas. It's kind of feeling, I don't know if they're knocked out, but they're not. I would not say they're off the canvas yet by any stretch of the imagination. So, looking for those two things. And lastly, my big surprise is talking to one of my pro clients, oil. I looked at it earlier. And if anybody can explain to me why the USO, the junkiest ETF in the world, has just gone from 31 to 38.5 I think in the last month, that's a pretty big move. Oh, excuse me, 33 to 38.30 in the last since the middle of June. The only thing I can see is Egypt. So I'm keeping my eye on that one as well because, as Mr. Tosaw says, the juice again is looking interesting in there for a move one way or the other.
Which one's crappier, VXX or USO in your opinion?
No, VXX by a mile. That is literally the crappiest thing to be long on the planet. Except for the TVIX, which actually I think
TVIX, yeah. TVIX
is out of the one handle.
TVIX is an outlier. That's its own other category at this point.
It's beyond bad. Yeah, I think it's stuck around the two handle, and I think is now totally immune to a change in volatility. How many contracts did it trade today? That's the thing that amazes me, is what's the volume of the product.
Yeah, people still trade the stupid thing. Unbelievable.
It is unbelievable that it trades at all. Let's see here. TVIX, just to let everybody know. And it traded 9.4 million shares.
So 9.4 million suckers out there, apparently.
It's totally useless.
Of course, your question would imply then that USO is less predictably crappy than VXX. Therefore, VXX is superior in that regard.
It's superior in its the predictableness of its crappiness, I guess. And USO it is a kind of a slow, plotty. Again, it's always hard to convert those futures into equities. I'm a little dubious about the whole concept. It's nice as from a selling point of view. Maybe except for the GLD and the SLV, which seems to track the underlying, fairly reliably. But once you start buying futures, you're into a whole kind of another world there. So I would just say all the listeners beware. All the products that buy futures have strange and funky characteristics, which you should take your time to understand.
Well said, sir. Oh, before we cut off you, any plans for Zynga coming up here on the 24th? Any diving into more straddles, more risk reversals, waiting and seeing? What's the plan here?
You know what is funny is we're so in the money on our Zynga stock now, and we've been able to write calls against it that we have just to buy right on through the earnings. Earnings is usually never very good because mostly they just keep trying to cut costs and their revenues keep dropping a little bit. So I'm not expecting a whole lot. Again, this is to me more like a value play, kind of like Yahoo. What's Yahoo got? Like $20 worth of intrinsic value or $23 of intrinsic value for all the stuff it owns. And I guess everybody's figured that out now that Alibaba's going to go public, and now it's trading 29. But you still strip out all the good stuff in Yahoo, and if the company's basically trading for $6, $6 for the whole business of Yahoo outside of all its assets. It's not very expensive.
Oh, you diehard fundamentalist, you.
I know.
Speaking of fundamentalists, but in an entirely different context, Mr. Uncle Mike Tosaw What are you watching? Of course, your big day is approaching the 23rd. Of course, Apple earnings, not the 28th as you thought before, Uncle Mike, but the 23rd. Let me correct you on that. What's the plan? What's the BBI set up? Are you getting anything in ahead of Apple, or you kind of just play wait and see game?
Well, a couple things. The first thing that concerns me is that I think you might actually be telling the truth about Apple earnings, so that's really screwing with my head this earnings cycle, so I don't know what to think about that. So now I have to look it up again, so you really know how those birds, and you really know how to get into my head on this stuff. Second off, what I'm doing going into Apple, with the few shares that we have, what we're looking to do is just be long the April for next year 390 puts. And then after the earnings date is when we'll start kind of doing some short-term put spreads and that type of thing.
So a little wait-and-see game there.
Yeah, nothing too crazy going into earnings, and then we'll get back at it in terms of selling some premium against it. Like I said, not a huge position in it at this point, but nonetheless, we're still watching it and still do have some exposure to it. The other thing that I think will be kind of interesting to watch tomorrow, I'm just watching the after-hours markets right now. Obviously, QQQ is down because of because Apple had earnings today, right? No, just kidding. Because of Microsoft and Google. But I'm curious to see how much the S&P and the Russell go along with it, just because they really have not moved too much in the after hours with those two.
There we go. Gets back to what Mr. Alex was saying before with the old dispersion days. Perhaps that trade not dead after all. Speaking of Mr. Alex, what are you watching for the rest of this week, sir?
Well, obviously tomorrow expiration, and given all the news we've had today, it's going to be exciting. And obviously folks won't hear this till tomorrow, so by then they'll either be schizophrenic or euphoric. Still looking at macro issues. New high on the Dow, new high on the transports, modest VIX, 10-year sitting around 250. Hope it stays in the range of, as I said, 230, 270. Above 270, I start to get nervous again. But next week, the big news is Apple. And if markets sort of stabilize off this news tonight, I'm still looking to take out 16,000 on the Dow.
Yeah, I don't disagree with Alex on that. Not even in the slightest.
Well, thank you for that. Good to know, sir. We were hoping to. We were worried that you were about to disagree vehemently.
I was thinking about disagreeing vehemently, and then I decided I can't disagree.
But apparently we were misinformed, so I have to fire those traitorous birdies anyway. All right, that is going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block program. But before we go, as always, let me check in with my cohorts, my partners in crime, to see what they have cooking in their respective necks of the woods that may interest you. Starting off with you, Uncle Mike Tosaw. Those birds may be traitors and may be two-timing me for you, but of course they are right on the Uncle Mike news, which is, of course, that the webinar train is pulling into the old station tonight. If you're listening to this tomorrow, of course, you can check out the archive over there at RCM Asset Management. What else is cooking in the land of the webinar train, sir?
Absolutely. We have a very special guest. We get him to come on about once a quarter. He is going to be broadcasting live on July 25th for TNT Thursday Night Trading, Mr. Mark Sebastian. So we'll have more details on what Mr. Mark is going to be talking about this coming Monday. But this week, the next guest, we have Seabass coming back on to our show, and we're excited.
Who is this guy you're talking about? I'm not familiar with him.
Some guy.
He's some deadbeat option trader. I don't know exactly.
Yeah, something like that.
Yeah,
something like that.
Only
That's
a silly.
My big news. Mark's coming back to the RCM guys. So go check him out there. That's our latest event.
That's your latest event too?
It is.
Go see Mark at his various endeavors and leave Andrew alone.
And leave me alone. Yes, thank you.
All right.
So that way he can just be left alone to do stuff.
Yes, exactly. Degenerate fundamentalist that he is, he got to do some stuff every now and then to keep the blood pumping. Speaking of the blood pumping, Mr. Alex, what's cooking in your respective neck of the woods? What's coming up on the OX webinar train?
Lots of webinars. Tuesday after the close, we're doing Idea Hub, and Idea Hub for futures options is almost put to bed. So that's an exciting development here. Wednesday, building blocks of futures options by our head of education, Joe Cusack. And think, as we've talked about, folks are embracing futures options. That business is growing. I'm going to be candid here, at a surprising rate, the way people are embracing options. But I think part of that is disappointment with products like Andrew talked about, the USO, and how it's a better trade in the futures option. Thursday, diagonals. Going to do a webinar on diagonals. There's a full pattern of webinars on the site. Just come to the site. Everything's free. All the events are free, and we are now building out an archive. So soon you'll be able to sort of go back and look at past events and listen to past events.
Great. Glad to hear it, because I know a lot of our listeners, they can't tune in for whatever the reason is. They like to check it out archived, make it easier to find that stuff. I know we certainly are in the archive content business, and people do appreciate that. So thank you for that, Mr. Alex. Of course, we are also hopping on board the futures options train. We have this great new program I've been teasing for a while. We have a couple episodes in the can, listeners, so it does exist. We're just putting the final finishing touches on it. So stay tuned to the Options Insider Radio Network for that. It will be launching sometime in the next few weeks, diving deep into the heart of the futures options landscape. So keep an eye out for that one. Should be very interesting. And as I mentioned at the top of the show, if you want to get in touch with us on this program or any other program, I know a lot of you wrote in for today's show. Sorry we didn't have time to get to it. We'll get to them next week. But keep those questions coming. We love them for all of our programs, not just the option block. Of course, you can do so at theoptionsinsider.com. You can leave us a comment there. You can post a comment on the archived show notes for the different shows. Of course, you can shoot us an email, questions@theoptionsinsider.com, or just tweet us over at Options on Twitter, or our newly revamped, and in the process of being even more revamped, Facebook presence over there at facebook.com/theoptionsinsider. Don't go to Options Insider. That's kind of a person page and doesn't really work that well. We're creating a much better business page for you guys to check out over there at The Options Insider, and you can post your questions and all that great stuff. So check it out. A lot of great ways for you to keep in touch with us here on the program. Make your voices heard as well. We love it. Keep it up. And on behalf of Alex and Andrew and Uncle Mike, and of course myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and for keeping and for propelling it up the charts the way you have. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.